I'm Caesar Bryan, and I am the portfolio manager of the Gabelli Gold Fund. And I'm going to make a couple of comments on the gold price and gold equities today. First, the gold price. Gold has traded in about a $200 trading range over the last 2 years. On the low side, $1,750, and on the high side, $1,950 per ounce. Now, on a couple of occasions, the price has gone below that to 1,700 or below 1,700, and a couple of times the gold price has jumped above 2,000. So what is it going to take to get gold either to go above the trading range or break out on the downside? First, the downside. Should the US economy not slow down more than it already has, and thus permitting an inflation to decline, thus permitting the Fed to quit tightening monetary policy, then in that Goldilocks environment, gold probably won't perform well and could break down to the downside. However, what could get gold to break out to the upside is a couple of things that come to mind. One is that the economy slows down considerably and goes into a recession, which will encourage or will pressure the Fed to ease monetary policy. And if inflation doesn't come down, that will create a lack of confidence in the monetary management of the US economy and would likely result in a higher gold price. The other event that could result in the gold price breaking out to the upside would be some sort of financial accident or financial event which causes the Fed to ease monetary policy. So those are two things to look for a higher gold price. Now, in terms of gold equities, they've been very disappointing performers so far this year. The gold stocks are down around about 15%, while the gold price is basically flat. So that means that they are cheap relative to their history. Also, they're cheap relative to the gold price. Interestingly, despite higher input costs, labor costs, and reagents, and electricity, and energy costs, the gold companies are generating good amounts of free cash flow, which has allowed them to pay, and in some cases increase, their dividend payouts to shareholders. So a number of the leading gold companies are paying dividends or have a dividend yield well in excess of 4%, and we think these dividends should the gold price remain at around about 1,800, can be maintained. So they're yielding well in excess of 4%, which we believe does provide some downside protection. And in the case or in an environment of higher gold prices, then the gold stocks should recover pretty strongly. Thank you.
Investors should carefully consider the investment objectives, risk, charges, and expenses of the fund before investing. The prospectus, which contains more complete information about this and other matters, should be read carefully before investing. To obtain a prospectus, please call 1-800-GABELLI or visit www.gabelli.com.